Hi, this is Roger Balzer, and in this video we're going to take a look at why what you are reading in the headlines may not be what is happening in the markets. During the first few months of 2013, the markets have had a great run. The Dow and the S&P are both up, and the media is saying that Wall Street is back. Is it? When I'm looking at the markets, there are three different sets of indicators I analyze on a daily basis to get a sense of the direction of the market. These sets are long-term indicators, intermediate-term indicators, and then we have a third group, which is short-term indicators. We're going to take a quick look at each of these three different areas to give you a sense of what's happening under the surface of the stock market. The long-term indicators are showing that we are on offense and have possession of the football. They're nowhere near reversing down to place the defensive team on the field, and that's a good sign. Sure, there will be times when we'll have some down days and pullbacks, but when all the long-term indicators are bullish, it's a very good sign. It's advisable today to be mostly invested in the market. It may not be appropriate for your situation to be 100% invested, but your bias should be towards having money in the market. The long-term indicators are really good, especially if you have money in retirement accounts or money that you're not planning on using for a very long time. Long term, we're looking. Right now, all the intermediate term indicators are all negative. It's probably not what you expected to hear. In fact, we're seeing a few large, well-known stocks moving down on their charts. We're also starting to see entire sectors reverse down and actually break their support lines. There are some pretty serious cracks happening underneath the surface in the intermediate term. I've been waiting for a pullback for the last few months, and we just haven't had one. One problem I see now is that the market has continued to advance without a pullback, and so the risk of a pullback is higher. But also the risk of that pullback, whenever it happens, can be a lot stronger than people expect, and is something that has me feeling very uneasy. The most famous example of a year when we went a long time without a pullback was 1987. The market started going up on January 1st, and we never even had a 5% pullback. It went straight up through the end of July. In late August, it hit its peak. Then in September, the market started to go down, and everybody knows what happened in October of 1987. My hope is that that scenario doesn't develop, but right now, in the intermediate term, all the indicators are negative. Under the short-term indicators, a few weeks ago in mid-April, the short-term indicators were all negative. At that time, I was expecting some kind of pullback in the markets, but again, it didn't happen. Now, it's the first week of May, and all of our short-term indicators are back on offense. What that means is we put another sell signal closer to where we stand right now in the market. All the short-term indicators are on sell signals, but they've all given a sell signal now and moved back up. We could be looking at the potential for a second sell signal, which would be very dangerous. While everybody's happy about the S&P and the Dow Jones reaching new highs, I think you need to start being a little cautious about how you're putting your money to work. One likely scenario is if you're putting money in the market today, it may not go anywhere for a while. In fact, it could go down in the near term, and that's just one scenario you have to be mindful of. Okay, it's time to have a quick math quiz. The Dow's hanging around 15,000. If we get a 5% drop in the Dow, that's 750 points. If we get a 10% drop in the Dow, that'd be 1,500 points. That's a lot of points. I talk to a lot of people all day long, and they say I'd be perfectly okay with a 5% pullback, 10% pullback, as long as the long-term markets are going to be okay. Well, I said, wait a minute. A 10% drop, and you're talking about 1,500 points? The media will be screaming about the apocalypse. So what I'm saying is just be prepared if we do get a 10% pullback. You're talking about a big point drop, and it could happen in a very short period of time. People are jumpy out there these days. I remember on April 23rd, the stock market went wild, and there was a drop of more than 150 points in just minutes when this hacked Associated Press tweet said there were 2 explosions in the White House and the president was injured. This market can and does move very, very quickly. Remember that any of the securities mentioned in this video are not a recommendation to buy or sell, and they also do not represent specific recommendations of Balzer Wealth Management. If you're relying on a video for investment advice, you're making a big mistake. You should consult with your investment advisor before you make a decision to buy or sell any investment. If you do not have an investment advisor, I encourage you to contact Balzer Wealth Management at 440-934-3114 or through our website at www.balzerwealth.com.